Have you wondered how to start controlling your financial future? Being able to do that is in your hands, and the first thing you need to do now is to start investing in the US stock market. No special study needed, no thousands of dollars in the bank. You also don't need to be an expert in math or finance. It's not as hard as you think, and this video is your first step to achieving it. Hello, I'm Michibit, and in this channel I teach you everything you need to know about investment, personal finance, and how to create your own financial freedom, all step by step. If you like the content and want to support the channel, please don't forget to like the video, and also subscribe, so I can earn an extra cookie. Let's get started. The US stock market is perhaps the greatest wealth generator that exists, and at the same time it is accessible to everyone, whether you live inside or outside the United States. To invest in it, you must do it through a registered online broker. These are like banks, in which you deposit your money, and you decide what, how much, and when you want to buy. Did you ever want to be part of the immense success of companies like Google and Apple, and not just search the internet and buy iPhones? This is possible, and in more ways than you can imagine. To start investing, you must understand three things. 1. What can I invest in, and how much money do I need? 2. What broker can I use? 3. How do I know when to buy and sell? Before answering each of these questions, I want to clear the most common concern everyone has at the beginning. Can I lose my money? I'm afraid of losing something that cost me so much to generate. Yes, you could lose all your money, but only if you don't know what you're investing in, or if you follow the advice of some TikTokers whom just because they have a cell phone and internet, think they know the magic formula to get rich quick. Don't worry, I'll help you learn what you can invest in, and regarding those TikTokers, just learn to ignore them. There are around 6,000 companies trading in the US stock market, and trying to choose among these, the winning companies that will multiply your money, is perhaps the most difficult challenge there is. 80% of investment fund managers, that is, the biggest brains in Wall Street, fail every year to outperform the market itself. What does that mean? It means that if you are starting to invest, your chances are not only that you will not achieve a better annual return than the general market, but that you will probably even lose money. But Michibit, what am I supposed to do then? I don't intend to lose my money. Exactly. That is why in this video you are going to learn that in order to build wealth over time, you must put your money into assets that represent the entire market, and not so much individual company stocks. But what is the market? Should I buy one share of each of the 6,000 companies you previously mentioned? No, definitely few people could do that. The best financial instrument in which you can invest are ETFs. ETFs were created in 1993 as a way to allow regular people to invest in baskets of assets, so to speak, and these baskets contain several companies at once. Each ETF or basket may represent a sector, an index, or the entire market, but at prices accessible to most. One ETF can cost less than $100, others up to $500, all depending on its popularity and how long they've been trading. Some of the best ETFs out there are those that track the movement of the S&P 500, which is the index of the 500 largest companies in the US by market capitalization. For example, we have SPY from State Street, VOO from Vanguard, and IVV from BlackRock. These three companies that I mentioned are among the largest investment funds in the world, and have decades of experience and excellent reputation. ETFs are not a new invention, nor are they a financial experiment where your money can disappear. These are 100% regulated under the financial laws of the United States market, and as long as you understand how to invest responsibly, and invest only under officially registered and well-known institutions, your investment will be safe. It is likely that by the time you are watching this video, we already have a very comprehensive tutorial available on how to wisely pick your ETFs. Now, how should I choose which broker to use? There are hundreds of brokers, but in this video we will show you some of the best. If you are a US resident, we recommend opening an account with one of the following brokers: Fidelity, TD Ameritrade, Interactive Brokers, E-Trade, Charles Schwab, and Webull. All these brokers have an excellent reputation, have been in business for a long time, and are fully regulated by the financial authorities. When you open an account with these brokers, by default you are protected by the SIPC, which is the Securities Investor Protection Corporation, up to a sum of $500,000 in the scenario the financial institution goes bankrupt. It is important to note that this protection is not for transaction losses. If you reside outside of the United States, the following brokers allow you to open an international account and make international wire deposits to fund your account: TD Ameritrade, Interactive Brokers, and TradeStation. These brokers accept accounts from most countries that have open business relationships with the US, as long as you provide the required paperwork, such as your proof of identity, proof of address, and fill your tax status, known as the W-8BEN form. Once your account is approved, check with your local bank how to make a transfer to the United States for stock investments. International transactions are more expensive, so try to make fewer transactions, sending greater amounts of funds in each one, and thus avoid paying more fees. Once your account is funded, it's time to decide when to buy. For this, it is important that you have a perspective of the price movement of each asset, such as an ETF, and look for fundamental and technical signals that give you the green light to buy. Feel free to use our tutorial on technical analysis for beginners. I leave the link in the comments. Now, I have a great tip for you. When you are investing in S&P 500 ETFs, meaning investing in the expansion of the US economy, market timing is not as important as time in the market. This means that your perseverance to buy continuously, and discipline to maintain your assets over time to generate wealth, is more important than spending all the time and effort trying to guess the perfect moment to buy. There you have it. Now you know what is the first step you must take to open your account with a US online broker, and thus start buying the first assets that will forge your financial future. By the way, a very powerful fact. Did you know that the S&P 500 index has returned an average of 10.67% annually since its inception in 1957? That means that if you invest $5,000 annually for 30 years of your productive life, you would end up with over $1 million for your retirement. Imagine what you would do if in some of those years you invested a little more. I get purring just thinking about it. If you have more questions, visit our Instagram. You can find us as @siver_bit, and our website is siverbit.com. The link is available below the video, in the comments section. Thank you for watching my video. Remember, I'm Michibit, and if you liked the video, give me a like and subscribe to my channel. You will make this kitty very happy. Meow. See you soon.